Ms. Wei Li, concerning inflows on the equity side, emerging markets replaced the Eurozone last month at the top regional exposure. How do you see the situation at the European ETF market?
Indeed, emerging market and European equity market have really been two favored destinations for investors and ETF investors so far this year. Now, where does this go going forward? We think that there is more room for both exposures to play out. In Europe, equities are supported by improving political risk sentiment, better earnings coming through in Europe, as well as still attractive valuation. And in emerging markets, we think that news around MSCI inclusion of Asia's market, news around decreasing risk to global trade. So both there is room for that to play out.
In sector and theme exposures, financials remained at the top with energy and SRE ETFs completing the podium. Will this trend continue in June as well?
Financials have seen recently more inflows because investor expectation for curve to steepen, and that is a technical term now. So when we say curve steepen, it means the long end of the US Treasury curve goes up higher, faster than the short end of the US Treasury curve. So investors are now expecting that to happen because they see greater room for growth to come through. They see greater room for inflation to come through. So because of that, investors have been going into financials. Now you talked about SRI, which is really a long-term trend. We see greater number of investors all across Europe embracing the SRI investing. And historically, SRI investing has been associated with just kind of feel-good factor for portfolios. But more and more now we're starting to see examples of SRI compliance translating into better corporate governance, which in turn has translated into better performance. So with better performance expectation, no wonder we're starting to see investors embracing SRI investing more and more.
What do you recommend to Swiss investors concerning ETF this summer?
I think from a local Swiss investor perspective, it's important to think about diversification globally. And when we do that, it's important to think about currency hedge or not currency hedge, because increasingly currency return and currency volatility contribute to a greater extent to your overall portfolio return and overall portfolio equity volatility.